House price growth is slowing. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because we're going to look at another article which is talking about house price growth in Australia, but this time it's slowing. So it's still growing. Don't worry guys. It's still going to grow. Calm down. We're not getting that housing bust that some people have been hoping for decades. There's still talk of it growing. So let's jump and have a look at the current asking prices. We'll just bring here. We can see this is all capital cities. Once again, we're still over $1 million. 3 betters, 988. If we bring the regions into it, guys, we're sitting at 685 for all houses and 600. We've gone up just a tad. 600,000. The other day we looked at it, wasn't 600. There you go. So, okay. Demand for housing is there. I'm not surprised, honestly, that housing, particularly in the regions, is in high demand because people are probably sick of being stuck in tiny little boxes. They want some room. They want Lebensraum. They want the fresh air, a garden. We were talking about on our live stream the other day about suggestions on how to be healthy during these lockdowns, how to improve your health. One viewer was saying how they've got a little apartment, but they grow indoor plants. That's a brilliant idea. Although with children, I can see them just tearing out all the dirt and making mess and the plants dying. But still, I can see it as a great idea. So let's have a look at this article. So Aussie home prices are up 16% in a year, but are losing steam. Australia's climbing home prices keep climbing. But new CoreLogic research shows prices are tapering as houses become less affordable. Well, yeah, that's it. Aussie housing values jumped 1.6% in July, taking house prices up 16.1% over the last 12 months. CoreLogic's research director, Tim Lawless, described the market as strong but losing steam. The 16.1% lift in national housing values over the past year is the fastest pace of annual growth since February 2004. Cheers to that. First recession, guys. First recession in 28 years. First recession in 28 years. You know, maybe Home Builder has something to do with it. Maybe, you know, all these building approvals shooting up in the moon. Well, there you go, guys. There you go. The precedent's now been set that massive government intervention in the economy to keep us out of recession. There'll be an expectation that this happens moving into the future. Are we heading into an MMT future, guys? Anyway, however, the monthly growth rate has been trending lower since March this year, when the national index rose 2.8%. Lawless attributed the low rate of growth in housing values to the fact that home prices rose more in a single month than incomes rose in a year. I thought that's just standard. Isn't that just standard? We'll bring up here, you know, the wage price index growth. Yeah, I mean, we're sitting here, 2%? Bit over? Houses are how you make your money, guys, in Australia. You don't do it in starting a business. You don't do it in being innovative. You don't do it in working. You buy houses. That's it. And maybe people are uncertain and concerned with what's happening in the world in the future, so they want to have a physical asset. And here's the thing, you know, we've got a population of 25 million. They'll open the floodgates, you know, and people will want to come to Australia. We've handled everything much better with regards to the pandemic. There'll be a demand for people to move here. Just wait and see. So, housing is moving out of reach for many members of the community. Along with declining home affordability, much of the earlier COVID-related financial support, particularly fiscal support relating to housing, has expired, Lawless said. It is, however, encouraging to see additional measures being rolled out for households and businesses as the latest COVID outbreak worsens. Lawless said on the flip side, demand is being stoked by record low mortgage rates and the fact that interest rates are expected to stay low for a prolonged time. Well, are they even going to be able to raise them? What would happen there? Here's the thing. If people are hoping for a market crash, we've seen how the government is willing to intervene in the economy so significantly, more than would have been expected in the past. So, you know, will my joke of mortgage keeper manifest into something that's real? So, dwelling sales are tracking approximately 40% above the 5-year average, while the listings remain about 26% below the 5-year average. So we've got a supply and demand mismatch in the housing market. The mismatch between demand and advertised supply remains a key factor, placing upward pressure on housing prices. Housing affordability. Well, here's the thing, guys. This is why housing affordability is an issue. This is the differences in household incomes here in Australia. I'm bringing this chart up again and again to just emphasize the differences in the classes that we have here in Australia. Okay, we're not an egalitarian society. Everyone isn't equal. Someone earning a household earning over $2,000 a week compared to one earning under $500 a week is doing a lot better. The middle income on, just a tad under, under 1,000, they're still more than double the adjusted lowest income. This is why you've got some people who can afford to buy these big houses, and this is why you've got a whole bunch of people that are desperately waiting for an opportunity to get in. Is this fair and just? Well, that's another question. So, CoreLogic research found that house price increases are slowing across all Australian capital cities. Sydney has recorded the sharpest reduction, with the monthly gain falling from 3.7% in March to 2% in July. Sydney is the most expensive capital city by some margin, and it has also been the city where values have risen the most over the first 7 months this year, Lawless said. And I'm getting another call from Zimbabwe this time. Worsening affordability is likely a key contributing factor in the slowdown here, along with the negative impact on consumer sentiment as the cities move through an extended lockdown period. Although the pace of growth has slowed, housing values continue to rise at a rate that is well above average across most of the country. Additionally, the previous stronger performance in regional markets as Australia moves from capital cities has stabilized. So there we have it, everyone. We're seeing a slowing in house price growth, but a huge disconnect in supply and demand. Is anyone at all surprised? And what's the solution to this? Is it even possible? Our government has shown they're willing to intervene in the market significantly. We've got a culture that's just obsessed with housing. You've got a disconnect between people who want to get in and don't want to. And what we'll do is we'll look at this poll I just did. Now, if you'll find these, I'm just bringing up my channel here, guys. You'll find these that they usually appear on your telephone, and we'll review them on Freedom Friday every week. And where is this one? Here we go. Have you been waiting? Have you been waiting for the property market to crash? Because there are a lot of people who've been waiting on the sidelines, really hoping for the property to correct, for a correction in the market, for a crash. 2,400 votes, 67% said yes, 33% said no. And here we go. So a comment from CJ. People I know have been waiting since the last millennium for prices to crash, stating that property is overpriced and it has yet to crash. It just keeps getting more and more expensive. Even if it had a correction and falls 10 to 20%, it will fall from an already inflated level and will never really be cheap like people are hoping for. Russell, as a millennial couple living in Sydney, we were looking to buy for around 3 years ago, from around early 2018, casually looking only for a year. We saw a lot of price action due to interest rate changes, lending restrictions, lack of supply, cheap buys, notably. Negative 15% correction in Bankstown due to the 20%. Ended up buying a freestanding house in Canterbury, Bankstown, LGA earlier this year for 20% plus of what I could have picked it up for in 18-19. In hindsight, it would have been better to just buy it and ride the equity growth instead of trying to time the market. There we go. That's the takeaway. That's the takeaway. People are trying to time the market. What's the trick? Timing the market or time in the market? Also, there's always a shortage of supply, and there are 200 plus inspections I attended to. There were always more buyers than sellers. Honestly believe now that prices will keep going up as soon as migration kicks off again. I believe that the government will do anything to prop up property prices. Maybe need to reframe the question. I believe the property market will likely correct or crash, but I'm not waiting for it. No, that's the question. I want to know if people are waiting for the crash intentionally, because there are people out there that are hoping, waiting, and not entering in the market, like our friend here, Russell, because they're trying to time it. Is that the smart suggestion? You let me know in the comments. And we'll review all of these questions on Friday, and there's still time for you to vote on this one. Take care, everyone. Have a great day. Let me know your thoughts and opinions on this one. Thank you all for watching. If you're a fan of the channel and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can sign up for SelfWealth or Stake. You can use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, and I'll see you next time. Bye for now.